What's going on, guys? Bexio back, and today we got a brand new video looking at Bitcoin because it's getting a little crazy, and people are absolutely losing their mind over every single little move in the price right now, and it's getting pretty crazy. But there are still lots of good things happening to Bitcoin. But before we jump into that, if you are not subscribed, make sure to smash that sub button because we are on the road to 1,000 subscribers. But jump right into this Bitcoin chart here, and it is actually moving pretty good. I mean, Bitcoin up 3% today, doing pretty well, but still in this descending channel, still going down. We'll see how it interacts, and we still have the same targets that it needs to break above. Is this 50K is going to be the first major thing, staying above that, because obviously you saw we were above it for a bit here a couple days ago and fell back down. But we need to stay above 50,000, and then we really need to get above 53,000. That's the $1 trillion market cap, and it is the SOPRA moving average. So it's like when things stop being out of the money, so people are in profit again, or short-term holders are in profit again. It's a weird metric like that, but it is an important one to try and get above that, and it carries a $1 trillion market cap, which is important. But basically, what I think we're going to do going into the end of the year is trade sideways. So we're probably going to trade sideways out of this descending channel here. It's the end of the year. Lots of unrealized profits from these companies that have been in Bitcoin. They might be securing those, going risk off to make sure they end the year with percentages and gains that they can show clients and say, look, we did a really good job. You got to stay. You want to stay with us. So next year, January is going to be massive for Bitcoin to see if these institutions come back in on like risk on and come back into Bitcoin. And I think they're going to. And that's what we got to look for, is the beginning of January, the first probably couple weeks, maybe the entire month of January, seeing if institutions start to flow back in again, because they've been flowing out recently. But looking at the price, probably trading sideways, wait until the beginning of next year to see how we can actually recover here. But the big metric that we always look at is this right here, the hash rate, which you see massive spike up here, going to new all-time highs. Bitcoin's hash rate has never been higher than it is right now. You see 181. The previous peak here was 180. So we have a massive move up to new all-time highs. The Bitcoin network's never been stronger. And we all know right here, this curve here to the fall down was because of all the China FUD and kicking out the miners on banning Bitcoin mining in China and actually kicking everybody out. They had to relocate, plugging back in. You see, they just trickled back up, and it took like 6 months, and we're at new all-time highs. All the miners are plugged back in. This is the best thing that could have happened to Bitcoin, because the network's more decentralized than it was before, so it's much more stronger. It's all around the globe now, and nobody can say China coin, or it's controlled by China, or there's too much hash power in China, because it's not there anymore. So it was an amazing thing that happened, that during the time, if you weren't really heavy into Bitcoin, like Bitcoiner, and understanding the network itself and not the asset, people freaked out. But everyone who was really deep in Bitcoin knew this was a good thing long term for Bitcoin, and we're seeing that now. But comparing this to the price, so you see these two kind of see hump here and down, and then move up, and then move down, and then spike up. And we've been using that as a way to kind of look at the price, because for some reason it's been matching the hash rate very closely. So we see this move up, move down, another move up, and then a big move down. And the hash rate is basically identical to this section here. And after that move down, we might not be done with it yet, but then a massive spike up. And the spike up could be, 60K, or if it matches because it's a new all-time high hash rate, might be a new all-time high Bitcoin price. So we might push over $69,000 in a relatively short period of time. And that's just basing off hash rate moves. But that might be an indicator leading into that these institutions are going to come back in the beginning of next year, and then have a massive move up in price as they go back to taking on risk and going risk on, and Bitcoin can offer them extremely good returns and not be extremely risky like altcoins are. And you got an interesting kind of 2-minute clip here from a podcast, What Bitcoin Did. I think it's Peter McCormick's podcast. This is him right there. And they have a good conversation here talking about what Bitcoin, how it reaches these $1 million prices, how it can do all this types of thing. And it's a good conversation.
It does seem to me, though, that pension funds are almost the perfect vehicle for investing in Bitcoin because they have that long time preference.
Bingo. The question is how much, right? And that's what we have to come down to. The wrong answer is 0. How much Bitcoin should they own? Well, the wrong answer is 0. What is the right answer? And the right answer, well,
start at 1%.
You got to get off 0. And borrowing from Palm.
So that is a big thing for the Bitcoin price, people talking about it, where, pension funds, because they want to be less risky. They don't want to take on extreme risk, but they have promised benefits to people. So getting off a 0% Bitcoin is almost like they have to do that.
Get off of 0. The right answer, in my opinion, somewhere between 10 and 20%.
Okay, that's big.
If it goes to 10 to 20% of all pensions are allocated to Bitcoin,
we probably hit our plus 1 million.
Easy.
Yeah.
Well.
So then there's your $1 million price target, is pensions putting 10 to 20%. That's a big ask. That's really big ask of like pensions to do, because that's a pretty good percentage into Bitcoin. But they are the perfect way to go about it because they have long time horizons. They have decades that they can wait for returns. They don't need them in 1 year, 2 years, anything like that.
Just do the math, and you'll see the demand side of the equation. Again, if total I've run through this math with you before, but if total financial assets in the world are $900 trillion, that's what they are. Okay, all bonds or all debt, all equities, all real estate, all gold, commodities, fine art, store of value, total of $900 trillion. I think Bitcoin easily captures 5% of that market. What's 5% of...
So this is another big thing with a lot of Bitcoiners looking at Bitcoin as a reserve currency of the world. I think it can get there. I know that it has the potential to do that and be able to facilitate that and actually make a fair system for the entire globe. And Bitcoin can do that. But $900 trillion is where you have all assets combined. So global, global reserve currency status for that, you can't really base off 900 trillion, but the GDP of the world, I think, is 400 trillion. So you can use that number, 400 trillion, and say if Bitcoin starts to get adopted and is used by 10% of the world, that's $40 trillion that flows through Bitcoin, and that's going to continue to grow. And then as more of the world takes on Bitcoin and uses it as a global kind of value system, then it just continues to grow on that. And then you hit 50%, that's 200 trillion. Then if you get the entire globe, that's 400 trillion. And then you start to continue and compound on that, where maybe the entire worth of the globe is 500 trillion by then. Now it's actually 500 trillion, and the dollar amount can fluctuate, but the Bitcoin behind it doesn't fluctuate. That's the important part of Bitcoin.
900 trillion is 45 trillion. What's 45 trillion divided by 21 million? It's over $2 million of Bitcoin in today's dollars.
But that's not even counting for price slippage when a lot of people want to buy.
How about this, brother?
Yeah.
It has to go through my price before it gets to $8 million. So let's start with $2 million. Okay. And the point is, the way it gets there is when pension funds say, I got to get my 5%. Because 5% is a minimum. And what if they say 10%? Well, then it's 90 trillion divided by 20.
So that's something to do with competition with pension funds. If you have one that does 5% and another that does 10%, the one that does 10% performs better and attracts more people to it, and people want to rely on that one for retirement. Now the other one has to go 10%, and then somebody else goes 15%. And it just is like this competition game till you get to a percent where everyone's just kind of like, this is where we're stopping. And, maybe that happens at 100%. Who knows how high it goes? But it's going to be competition between them competing to keep people and attract people to promising retirement.
million, and all of a sudden it's $4.5 million bucks of Bitcoin.
See, they are the perfect vehicle for Bitcoin. They have long time preference.
And by the way, what are their alternatives? They're pretty stinky right now.
Big thing with Bitcoin and with pension funds and the ability of Bitcoin to kind of integrate into these large, massive funds, and even just 10% allocation is a massive amount of money that'll flow into Bitcoin, something that's massive. So these things can happen quickly, and with certain funds like that, where they don't want to take on extreme risk, they don't want to buy penny stocks or altcoins and try and make tons of gains, but risk losing tons of money because they have to pay out on their promises to people of being able to pay out a certain percentage every year for their retirement. And then just to end this video off, we have a what hyper Bitcoinization looks like, and it's still early. So the Bitcoin network settlements, you can see kind of, this is in trillions, so that's why it's 0, 0, and then a penny. So it's in trillions. But 2017, you see 2.7 trillion. Then a bear market, where it's 2.2 trillion, almost 1.9, 2 trillion, and then a massive spike in 2021 to $12 trillion that were settled this year. Massive numbers. The Bitcoin network continuing to grow, continuing to do good fundamentally, and that's what matters long term. So even though Bitcoin might be volatile with its price and on a downtrend right now and people freaking out, the fundamentals continue to move massively. The hash rate, new all-time high, settlement on the network, massive numbers, and then the ability to continue growing from here. People think it's expensive for Bitcoin now. It's nothing if pension funds get in and allocate percents to it. If companies get in, have to allocate percents their balance sheet to it, and countries get in and start to allocate percentages to strategic reserves of Bitcoin. It's always so early right now, and people just can't focus super long term like that for whatever reason. That's gonna do it for this video, guys. As always, don't forget to smash that like button and subscribe. We are on the road to 1,000 subscribers. See you guys in my next video.